Well, you don't need me to remind you that we're still in the midst of some pretty tough economic times, and you might find yourself overwhelmed when trying to figure out how to best protect you and your family in these rough times. Well, there are ways to be insurance savvy, and here to tell us more about how we can do just that is Barnum Financial's Senior Financial Planner, Michael Lynch. Welcome to the show, Michael. So great to have you.
Well, it's great to be back here, Desiree.
It's always nice having you on here.
It's good to be on.
Now, let's talk about this. How can we become more insurance, what you call smart?
The best way to become insurance smart is really become financially planning smart. And if we do financial planning properly, we help people achieve this great ends. Hold these two thoughts in their mind at the same time and yet be at peace.
Okay.
They're going to live forever or they're going to die tomorrow. We do the live forever by prudent savings and investing, and we take advantage of the die tomorrow with smart use of insurance products.
Very good point. Now, in these crucial times, I mean, how do you find the balance between learning how to save, invest, but also, again, become more insurance smart and savvy and making sure that you're planning that way?
You hit on the right term, which is balance. You got to understand there's certain things that only investments can do for you, and there's certain things that only insurance can do for you. Let's take my situation. I have two young children. I have a daughter who has special needs, and I have a son who's probably going to cause some special needs over his lifetime. So my daughter's going to need a trust. My son's going to need a college education. So I'm saving for both of them.
Right.
But if I can't work tomorrow, or if I die tomorrow, it doesn't matter how good of an investor I am, they're both going to be in a world of hurt. I need insurance to fund those vehicles if I don't make it to complete the financial plan myself.
And people don't typically like to think about insurance, but you say, bottom line again, it is absolutely critical. Everybody should be thinking about it.
You have to think about it again because, you know, somebody at our company says this. They say, if we thought about death and dismemberment all the time, it would be a real drag to be around, so people don't think about it. But they got to think, what happens when the unexpected things happen?
Right.
You got to use insurance to prevent human and financial tragedy, human tragedies becoming financial tragedies.
What would you say are the typical needs of a person or family? I mean, what are you seeing?
Yeah, you know, some are basic and people get, right?
Okay.
So you own a car, you got to have car insurance.
Right.
You own a house, you have house insurance. You should have liability insurance. Most people with just a couple dollars in the bank think they have to have medical insurance because Yale New Haven will wipe them out.
Exactly.
But it's where they get to the human part that they really underinsure themselves on the life insurance and on the disability insurance. They need to ask themselves some fundamental questions. That's
right. You talked about the disability insurance and saying that a lot of times we're covered 60% of the time, or 60%, but again, you've got to provide or rather be able to make up for that gap.
Well, that's right. Ask yourself this question. If you couldn't go to work tomorrow for an extended period of time, would it be a financial problem for yourself or someone you love? And if the answer is yes, you need to make up the gap. Same thing with life insurance. If you weren't going to come home from work tonight, would it be a problem for people who depend on you? If the answer is yes, you need to have a plan.
And what kind of plans are we talking about? I mean, what can you say if I came to you and said, listen, I need to make sure that I'm planning accordingly, like you're talking about, what would you say to me?
Well, I would say, let's take a step and look back. I would say, look, don't underestimate the value of your human capital. People will insure an iPod for the full $150, but they won't insure $1.5 million worth of income. You got to think of yourself as a money machine. If you had a money machine in the basement, let's say we were married, and I was making $50,000.
Oh, okay.
And if you had a machine, if I wasn't your husband, but I was a machine in the basement, printing out $50,000 for the next 30 years, tax adjusted, you'd insure it.
Yes.
For as much as you could.
Okay.
Well, yet because I'm a person, you see me all the time, nothing's ever happened to me.
It's like, nah, I don't need to. Right.
You don't do it.
That's a very good point. Now, talk with us a little bit about employer benefits, because I think a lot of us think that we're covered under certain employer benefits, and not always the case.
Absolutely right. Employer benefits, I like to say, are like the first 6 grades of your education. Great start. You wouldn't want to do without them, but you probably don't want to end there either.
Right.
And so take disability. Top employer plan, typically 60% of your income taxable. So I'd ask you this, Desiree, could you live on 60% of your income?
Oh, I don't know. Not just yet. I hope to one day, but not just yet.
And if you said yes, I would say, well, why aren't you already then? And so if the answer is no, then you need to think about making it up. The same thing for life insurance. Maybe $50,000, maybe 2 or 3 times the income. Got to ask yourself this question: how long you plan on being dead? Because I know if I die and only have 2 years' salary, I got to come back in year 3, or my family's going to be in trouble. So I have to face that issue, put a little money aside for it.
But I think it's tough for us to face that issue. I think a lot of people have that kind of problem. So what do you say to kind of ease that tension that we feel about that?
Ask questions like that and make you laugh. How long you plan on being dead?
I don't know if I want to laugh about that, but it does make me laugh. Talk with us about our protection needs, because this is interesting. We were talking earlier about how protection needs kind of change over time.
Yeah, absolutely right. So I like to think of the goose and the golden egg.
Okay.
So when we're young, like that's right, you're
22.
That's right, Mike. That's right, and you're going to make a fabulous, glorious, huge pile of money that I can only fantasize about.
Oh,
it's big.
yes.
So you're worth a lot of money right now, but it's all in your human capital. we need to protect that human capital. So in a certain sense, you're a goose that's going to lay a lot of golden eggs, so we need to protect the goose.
Right.
Now let's fast forward to 22, so you're going to retire at 52, 30 years?
Yes.
Now, you're still a goose, but you got a big pile of eggs. Now you need to insure the eggs. So typically what happens is we trade our human capital over our lifetime for financial capital. We need to insure the human capital and then slowly insure the financial capital, because ultimately when we're retired, we're living on assets and living on income that we've built up, like pensions and Social Security.
I absolutely love it. If you're looking to protect those wonderful golden eggs, we need to tell folks about where they can get the information. I love that. We've got to protect the eggs.
You got to protect the eggs.
I love it. Listen, if you want more information...
First the goose, then the eggs.
First the goose, then the eggs. If you want more information on becoming insurance savvy, of course, you can contact Barnum Financial directly or just come to our website, WTNH.com. Click on Connecticut Style. Michael Lynch, it's all about those golden eggs. We appreciate you being here. Thank you so much.